Yeah, this meetup is definitely an anomaly when it comes to cryptocurrency meetups. Normally, you go to a Bitcoin or Ethereum meetup, and it's maybe 2% women. It's a sea of men. Um, and as Lindsay mentioned earlier, part of the reason is because it's the perfect storm of all the subjects that are typically underrepresented in women: finance, programming, hardware. And so I do think that another part of it is because women go to these meetups and don't see a lot of other women, they get discouraged, or if they're confused about the technology, they like don't have the confidence to ask because they don't want to sound stupid. I think that could be a part of it. But also men are just, they tend to be more overconfident in voicing their opinions in this space. So they read like the Bitcoin white paper, they skim it, and then they think they know like all the things, and they like get 20,000 Twitter followers. Whereas like women want to like make sure, well, typically I'm stereotyping, but like they want to make sure they know everything before they sprout out about it. So I think that's just another thing, but it's definitely important for women to see more representation in this space. And I think we do see a lot of good representation. We're starting to see more and more representation.
I think you bring up such a good point about how, we'll obviously research things like a ton before we'll actually vocally get on board with something. But you also were touching a little bit about the fact that women, we will ask questions, but maybe you could just break down for us like literally what you do, like how what you're doing is making a wider influence, like just break it down for us. Like I think there's still confusion around like blockchain and how it is powered by crypto and vice versa. So just kind of lay it in layman's terms for folks in the crowd.
So what do we do?
Yeah, just like breaking it down, like making it easy for folks in the crowd to understand exactly what you're working on.
Okay, so for me, I'm working at a company called Stellar, which uses blockchain to facilitate payments across the world. So the idea is that financial institutions can issue credits for certain fiat currencies and assets onto the blockchain, and then they can exchange it via the Stellar distributed exchange for other assets or fiat currencies. And we're trying to get global adoption and to reach people worldwide with the Stellar platform to facilitate cheaper payments across the globe. And for me, I have to analyze the regulatory implications of operating in all these countries because different countries have different attitudes towards cryptocurrency and the usage of blockchain. And some places associate blockchain with, bad actors, money laundering. So you have to really work hard to talk with policymakers and dispel illusions or, bad associations associated with blockchain.
So like I mentioned before, we are building out an asset management platform. We're actually just starting with crypto. I actually see a future in 10 years where, all of where clearing firms don't exist for stocks and bonds, and that's kind of like where we're headed. So on a day-to-day basis, right now we're building out the retail side because you have to have retail customers and liquidity, so you have value for the institutional investors. What's so powerful about what we're building is because we're built on Stellar. Because we are a financial institution on Stellar, it actually gives us a unique opportunity to add more value to the users in a way that hasn't been done before. Meaning, if you look at all of the website data, like on SimilarWeb of all of these other exchanges, if you will, so Bittrex or Bitcoin, Coinbase or Poloniex, you only see that the US is like 7 to maybe 11% of the market. And if you look further at that data, there's a huge communities in South Korea and Hong Kong and China and Japan, in Brazil and Argentina and Ukraine and Russia. So what makes what we're building so powerful is that we actually enable those people to cash out into their own fiat currency in a regulatory compliant way because we're on a distributed ledger. And I think that that's what's going to be super powerful in the wave of the next generation in terms of trading platforms, if you will, and just like the transfer of value.
So Luna Capital is a crypto asset fund. We basically do a little bit of ICO investing, and to take a step back, ICO means initial coin offering, which is a new way of fundraising. You could really relate it to a global Kickstarter. And it's a little bit unregulated, so anyone can invest, which is really cool. So I typically will invest in the really early rounds, the strategic institutional rounds, and then they go off and raise from the rest of the world, which is really cool. And I'll do around 2 to 4 of those a month. And I have 2 other partners, Travis Goff, who co-founded the world's largest Bitcoin ATM network. And he's moved so much money across cold storage the last 4 years. And he deals with the security side and does some of the trading. So we act as an in-between, a hedge fund and a VC firm. So coming from Precursor, I learned a lot about investing in teams, investing in ideas at such an early stage. And this is typically what you're doing. And a lot of it could go to nothing. A lot of these ICOs act as exits. So you really have to evaluate a team and see their discipline and really reach farther than that and understand what they're really trying to build. And we like to build in things that have more technical infrastructure that are trying to improve upon that. I have another partner, Michael Mazzata, who's had a fund for 10+ years. So he actually helped us set up this thing in a legal framework. And it's really interesting because I think, well, now the VCs are starting to get in and they don't understand liquidity and how this really works. I spoke to a VC the other month and they're like, oh yeah, we invested in Enigma and had $3 million worth of Enigma. But we didn't set up a crypto fund, so what do we do with it? And like, you didn't set up anything. I was like, do you have a crypto person in-house? Like, no, we now have all these tokens. And it dropped to 300,000 or something like that. Yeah, they had this really great deal or whatever, and they just kind of didn't liquidate it. But now the VCs are trying to structure things in ways so that they like these lockups. They like these long lockups because they don't want to deal with liquidity. But the beauty of the space is that there is liquidity, at least some kind of early percentage of distribution in the early stages. So I evaluate that in so many different realms and prospects and look at so many measures and KPI things to make wise decisions in this space. And of course, a lot of things that you hope will do really well sometimes don't, because it just depends on if it's a bull or bear market. And right now we're waiting a little bit out and just holding on to some things. But yeah, I think the best way to invest in this market is to invest like you're a VC or an early stage investor and say, okay, well, it's going to take at least a few years for these companies to actually build out. I think investors in this space, they get really hyped up and they get really impatient, thinking that these projects need to be built out in 6 months or so. Well, in the traditional VC world, it takes sometimes a decade for a company to actually reach a certain level, and you have to just wait that out. So it's really exciting. I want to invest in things that I believe in and that I want to hold for a decade, and maybe possibly those could be like 200x returns. So that would be really cool.
And so, Lindsay,
Which Lindsay?
No, go for it. So for the founders in the audience, what should they be looking to do or looking for to add blockchain technology into what they might already be building? Do you have any advice or thoughts on it, what founders should be looking to do to add blockchain technologies to what they're building?
To what founders should look at?
Yes.
To what they're building.
Yeah.
So that they're appealing to investors.
Mm-hmm.
So I think founders, one of the main things that I've noticed is that they're really scared of the dumb in the beginning. That happens typically, and they try to lock people up a lot, or they do things that, well, one, you have to build a token economy that's favorable for the founding team, and then also for the investors. I feel like this is a pretty win-win space. Everyone can win, and I mean, these companies are raising 30 million to 200 million sometimes, and then you have Telegram raising 2 billion, which is so ridiculous. So raising 2 billion. Yeah, and some VCs are like, oh yeah, 4x return in a year or so. That's really good for a VC firm. Yeah, for sure. Yeah, and I talked to Charles the other day, and
I was like, he's like, yeah, that's a really great return for a short period of time. Well, I think one, we have to be, as investors, we have to be responsible to invest in things that are going to act with integrity. What company needs $2 billion in a raise in like a really early stage, in a really early stage company, but though Telegram has all these users and apps or whatever, but I still think it has to do with one, the token economy, how you structure it so that you're favorable for everyone all around, and then the incentives as well. Vesting periods is something that a lot of people look into. And then what are you building for, right? Are you building to solve a problem, or are you just looking for a problem to solve? So that's a lot of the question here. And then how dedicated, what's your time frame of when you really want this thing to succeed? And you have to understand that your business model is separate from the token, and to really focus on the product instead of focusing so much on the marketing or whatever. Because if you build a good product, then people will eventually notice. And if you have right strategic investors who will vouch for you, then that's what should really speak louder than what you post on Medium every day. There you go.
Do you have any thoughts on it?
I have some thoughts on governance. I think that the market will slowly shift, after everything calms down, and investors will get more sophisticated. And I think that, back to your point, kind of around governance and token economics, like raising a huge, $200 million ICO, we might be seeing smart contracts where you're going to have to perform, like this quarter, did you hit these metrics? Okay, if you did, you get to unlock the next level. This is like what blockchain's all about, right? A smart contract, so you can, if you meet this criteria, then you advance on. I think that, I think we're going to see more of that. I like governance, like when I invest in token sales. I think I saw one like 6 months ago where it's like these Stanford kids, I'm not going to mention who they are, but it was like an 18-month lockup, for the founders, which is kind of like unheard of, because if you're a traditional venture-backed founder, you're locked up for 4 or 5 years. So what they were tackling was really, really huge. So I think just being mindful about setting expectations for your investors, and being realistic about what you can accomplish in that time.
Yeah, as well, about utility versus security, and she can touch upon that, but I think people tried so hard to act like this utility token last year, but I know everything, right? Who knows really? But when I first joined Precursor, there's this company that was a press company, and they were so intrigued by ICOs, and they're, can we ICO our press comp company? And at the time, I was like, why not? But then I was thinking, okay, well, the market probably won't really react too positively to that, because that was really early on in 2017. And now I think that it's going to become more normal for other types of companies that don't necessarily need blockchain to build an ICO and to raise through an ICO. And I think that's fair, because then that forces a lot of people to really force something in their white paper to say, okay, this is why we need the blockchain. But I feel like ICOs are really empowering to founders, because not every founder has access to the VC world or access to all these investors. Now you can launch an ICO and let the world decide if they believe in you. And I think that's really cool.
Yeah, so taking a step back, I think, so for the entrepreneurial people in this room, if you're not already in blockchain, you might have thought, oh wow, these blockchain companies are raising so much money through ICOs, should I get in on this? So I have a slightly different view than Lindsay Mall on ICOs. I feel like you should be very careful of doing an ICO. First, ICOs are associated with extremely high legal fees if you want to, lower the risk of you going to jail and having litigators, clear out your bank account. And also the question remains, do you actually need a blockchain for what you're doing? The blockchain can be actually way slower than a centralized database, and it could be vulnerable to a lot of hacks. So maybe it's not necessarily suitable for all businesses, and ICOs may be too much legal risk for people to handle. For example, recently the SEC has subpoenaed a lot of companies that have done ICOs, and I'm sure the founders aren't sleeping super well. And we also know ICOs that have over 5+ class action lawsuits, on their desk. So these are all things to consider.
I have a little, no, great point. Well, what if they set up themselves as a security, right? Because there are all these companies that I've seen come out, and now this is so a little bit off topic, but they're IPOing, and they raise an IPO or do an IPO at a $50 million valuation, and then they use these tokens as dividends. What are your thoughts on that as well? Because that's really interesting. I don't think that every ICO needs to integrate blockchain to your sharing, but I think there could be a certain token that's meant for these types of raises where you don't have to integrate it into your system, right? And not everything needs blockchain, and that's why I also like DAX, which is a more centralized thing that has been around for a long time, more meant for the enterprise level. So it's a non-blockchain cryptocurrency, and that goes to show that it's way more scalable and supposedly more secure than blockchain. There's so many things that blockchain needs to build upon to really improve to reach at a level that the world needs today.
Wait, which one?
DAX. So yeah, so DAX versus blockchain. Bitcoin and Ethereum. I mean, Bitcoin can only do around 7 transactions per second, and Ethereum can do around 13. You have Casper and Lightning Network that's coming out, and even if that's successful, I still think that there needs to be something. I still think there are some industries that need something more centralized, because who knows? I have a different opinion than one.
We're so stellar focused. I'm did you know that it can do 300,000 transactions for 1 penny?
I'm trying to get my friends to raise on the stellar. I'm a big fan.
Happy to hear that.
And so on the regulation front, where do you see things shaking out in a few years?
In a few years, we don't know what things will look like.
Okay, next 6 months.
Yeah, so it seems like every week, a regulatory agency is coming out and saying what you're doing is illegal, you guys are going to jail. So there's a lot of things to focus on. In the US, there are at least 5 different agencies that regulate certain aspects of blockchain applications. For example, the SEC regulates issuance of securities, and some ICO tokens may be considered securities. The CFTC regulates commodity derivatives, and in 2015 they said Bitcoin is a commodity, so they have to look at Bitcoin futures and probably Ethereum futures and all those interesting instruments. There's the FTC that regulates, consumer protection, and they will go after people who issue fraudulent claims. So if an organization says our blockchain will help, solve cancer, then that might be a claim that they go after. There's the Consumer Financial Protection Bureau created by Dodd-Frank, which looks at financial protection of consumers in terms of financial products. And then there's also the IRS, who's going to go after all the people who didn't report their crypto gains. There are so many agencies that are looking at this, and there are also the state level and there's also FinCEN, which looks at money transmitter, anti-money laundering. And then there's the state level versions of all these agencies. There's the global version, which is all the countries, each country has its own version of all these agencies. So if you are potentially subject to, hundreds of regulators, it's crazy. Yeah, so we're seeing different regulators approach the space with different attitudes. For example, interestingly, Japan has been pretty crypto friendly, whereas China has been pretty crypto unfriendly. Switzerland, crypto friendly. New York, crypto unfriendly. So different jurisdictions have different attitudes towards this, and over the long run, we'll see crypto companies naturally move to these crypto-friendly jurisdictions, and a lot of innovation in blockchain might end up being in Japan or Switzerland or Singapore. And we're even seeing a lot of companies say, oh, we can no longer work in the US, we can't serve US customers anymore. And that's actually, a loss for people who are excited about this technology in the US.
And so why do you think some regions are more embracing of it than others?
Yeah, so I think there are so many factors that play into it. One factor is how strictly a government approaches its monetary policy. So for example, China has policies on how money can be transferred out of the country. And if they see, people are using Bitcoin to bypass these monetary controls, then they will tend to have stricter regulations. Another thing could be how, tax is approached in the country. So, for example, some countries like Zimbabwe and Venezuela, they tax their citizens through high inflation. They just keep on printing money, and inflation rates are insane, which is why a lot of Venezuelans want to hold Bitcoin. The Venezuelan government might not like, having the majority of its citizens hold Bitcoin, because that means they can tax them less through inflationary processes. Some countries might also just want to be very innovation friendly. So Switzerland, it wants to be very innovation friendly for fintech at least. Singapore also wants to be super friendly towards fintech. And so you see them having slightly less strict, takes on regulation of cryptocurrency.
Is there anything you two want to add to that?
Oh yeah, just to your point, we're seeing a lot of friendliness in the Middle East. Funny enough, like in Dubai, Abu Dhabi, and Bahrain, where they're on a race to be like the coolest, biggest, most innovative place on the planet. We're actually, that's all I do all day long is talk to lawyers and fill out paperwork and think about how we're going to structure some of this stuff, because the regulatory climate is so strict in the U.S. We're at MSB with Vincent, we're registered with FINRA, we're getting our broker-dealer license with the SEC, we're applying for an advanced trading platform with the SEC as well, which will take 18 months to get, and then some money transmitter licenses apply. So what I just said right there is only like $5 million.
So cheap.
We're looking at, in the interim, I'm not saying that we're not going to go through with some of these processes, but in the interim, we're totally considering other places that, we're getting our broker-dealer and exchange license in New Zealand, and it takes 2 weeks. It takes you have to just register to be a broker-dealer in New Zealand. You don't even have to take a test or anything. It helps when your co-founder is Kiwi. We're just looking at regulatory Jenga right now.
People still need your Series 7 in order to deal with this stuff now?
In the US, in the US, so to get the licensing that we're going after, we have to do a Series 7, a Series 40, 65, another 48, and something else. It's 4 tests.
Include blockchain and Bitcoin and cryptocurrency?
No, okay. So the issue is that because they're like deemed, some of these things are deemed securities, they're applying old law. Think of like when these things were like developed in the 1930s, like you had bearer bonds, like the stocks were like pieces of paper and people had to have like custody of them and put them in safes, and like if you wanted to swap them with Lindsay, like somebody had to like go run into the safe and like have it to her office in 3 days. You know, it's a paper world. So our regulatory, you know, conditions have not upgraded to the time of the digital age. And you know, the smart thing to do is, well, you see a lot of people here. You know, I was on the phone with someone like last week. They're like, "Oh, those regulator clowns," and I'm like, "Oh my god." You know, it's something that you need to do, even though you don't like. I think that if you like show like good faith, then you can open up that dialogue, and you know, hopefully things will change and be updated. Yeah, I mean, we just have a long way to go.
FINRA is a pain in the ass. So I took those tests. I took the Series 65 back in May. I just, do you want to come sponsor me? Oh, I failed that. I was like, I'm studying the wrong thing. I studied all, I mean, it was easy math stuff, lots of puts and calls on there. But it was a lot of the last 3 chapters of just memorizing sentences. You just have to know the law really well. Because they want to make sure you don't break it.
Bar exam.
Yeah, I know. Usually when you go to JP Morgan or something, you take the Series 7, and then later on you go work in a hedge fund. And do you keep the Series 7 and you do 63? But basically the Series 65 is a mixture of the Series 7 and 63, and you take that and you're good to go. But it's a pain, and all the materials to study for it is like $500 to $1,000. So yeah, FINRA also takes so long to respond or to help you get things done. So it's good that you have the option to go to New Zealand.
Yeah, that's awesome. Meanwhile, my life is serious work. All I do all day. Yeah, I do work. That's the glamour of being in a blockchain.
Yeah, so there's this popular perception that working in blockchain means you get to be anonymous and you get to do whatever the hell you want. But if you want to be like, identify yourself as a fit, with the regulators, then you have to do things in a compliant manner. Unless you want to be anonymous forever and you use like, Zcash in Monero for all your future transactions, you're probably going to be identified one way or another. There's good technology to track down people on the blockchain, and you have to abide by these regulations. And so the tech has to fit current regulations, but at the same time, there are good institutions, lobbying institutions like Coin Center, that are actually helping to educate regulators so that they don't do anything totally crazy, like say all cryptocurrencies are securities. So there's so there's definitely a push by certain parties in this industry to help educate regulators and help actually create a better regulatory environment and more regulatory certainty for blockchain companies.
Great.
And it could be that the Wall Street, because like New York is really unfriendly, so it could be just like the people who have complied, all the big banks and JP Morgan, all these people that have spent all this money in infrastructure that can afford to, not embrace innovation and kind of make it harder for startups to trade. Right. So I think that maybe they're like pushing for it to say, oh, like they're all securities, so like this all needs to go away because it all needs to come back to Wall Street.
Interesting there.
Yeah.
Okay, great. And before I open it up to QA, because I think we're coming almost to time, but I'd love to hear from you all about like how you think that the folks in here in the room can get more involved in the industry and actually get their foot in the door.
Yeah, definitely. So I think in order to participate in this industry, I think everyone should have a base understanding of the technology. We see a lot of people who don't, who want to be thought leaders in this space, but I think it's very necessary to, I think one of the key things to do is to read the Bitcoin white paper. That's a must. Maybe read the Ethereum white paper. That would also help educate you on the terminology of the space. And also there's person called Linda Xie, who manages a investment called Scalar Capital, and she has this list of good Medium articles that are good for introductory people in this space. So I recommend reading Bitcoin and Ethereum white paper, and also the list of Medium articles that she has compiled.
How to get into the space. There's so many opportunities in this space now, so it's just a matter of you just identifying what it is, because there has been so much capital thrown at it. It's just, we need more talent in all areas. So especially operationally, engineering, marketing, legal, content, media. Oh my God, media. I wish the reporting was a little better.
We have some reporters in the audience.
Talk to me. I want to it's very frothy. I feel like only things with merit are kind of pushed under the rug, where there's a lot of glitz around some of these other projects. So there's so much there are so many roles at HR, hiring, recruiting. There's just so many roles that need to be filled in this sector. It's just we need to commit to it.
I think going to these meetups and asking really good questions, ask the dumb questions. I think that's so important. And don't be afraid, because most people don't really know a lot either, and they use all these big words, and it makes them sound smart. And maybe ask people what those big words mean. It's okay. I ask a ton of dumb questions. I mean, my teacher in high school always told me to do so. And that's how I really learned. And to join communities of people, there's a Team Block Society that Yasmin runs, and I've helped her run this syndicate form of it. But I think we've done one deal. But basically, I try to get more of my female friends in the industry and help them get into ICOs. And it's difficult for women right now, because a lot of them are just entering the industry. And right now, the minimums have just increased. And if there's so much demand to get in these ICOs, and they're like, okay, what do you have to offer us as an investor? And the high minimum is $500K, and you have to bring so much value. Trying to get more women to get in different positions so that they can bring value. And even if you're not in the blockchain community, you still have skills that could be really valuable for this space. And that's what I'm really excited about, is more talent in this space. And we need more diversity. We need more really good reporters, really good growth hackers, writers, designers. I think design is going to be really important. UI, UX is one of my most favorite goals to see in this industry, not just that's second to the scalability part of things and technical infrastructure. Also, just getting a group of friends, and I'm in a ton of group channels on Facebook Messenger where we all ask each other questions and talk about projects. And how I learned was basically YouTube. So that's how I learned everything. That's how I learned how to code. That's how I learned how to trade and technical analysis. And then asking all my friends about it in school. So really, ask all the dumb questions.
I think that's a good segue into what dumb questions do you have? But really, they're intelligent ones. Go for it.
I might have a good introduction. First of all, if there's anyone starting a blockchain company and you might need investing, please talk to me, because I work at a venture capital firm. Second of all, I do want to ask you more about China, since we work really closely with China. It doesn't make sense to me.
Aren't they the ones that are mining the most cryptocurrency out of all countries, and they're the ones that are blocking this whole progress with this industry?
Yeah.
So
Yes, they are. They are.
So how does that make sense, and what do you see their future becoming?
Sure, I think that they know who the traders are, right? I mean, not the traders. They know who the miners are. It's just a very small group of miners in China that own all these farms. So it's very easy to identify. Say actually really easy to identify, like, you know, like wallet addresses and stuff. Like, everybody thinks like Bitcoin is like anonymous, and it really isn't. So I think they're more worried about like the capital flight risk with the traders and investors rather than the miners.
Yeah, so I think the top 8 miners of Bitcoin are currently in China. And China has issued statements saying, oh, Bitcoin mining might be illegal in the future. And so we're seeing a lot of outbound, activity where these Bitcoin miners go to other jurisdictions like Hong Kong or Singapore or Japan, and they want even like parts of Canada to, continue their activities. So, I mean, we'll see. I think China isn't gonna ban blockchain technology, but I think it will try to exert control over what technologies the country can use, and this control will probably implicate, heavier government monitoring.
Any other questions? Go for it.
You mentioned companies moving out of the United States because of regulation. I'm wondering what you think of like shortages of engineers and how staffing would work in environments outside of San Francisco. If you think that these companies would actually be able to find enough blockchain engineers.
Yeah, so San Francisco definitely has a lot of good engineers, but also I think Eastern Europe has a lot of very good engineers, especially in blockchain. So Eastern Europe, also South Korea, China, Singapore, there is a lot of good global blockchain talent. Relatively, there isn't that many good blockchain engineers, period. But
I think that if you're referring to like core protocol level engineer, there's probably like only 100 good ones in the world. But if you're building on top of blockchain technology, a lot of the code base now is wrapped in popular languages like React and Go, so you can find developers everywhere to kind of to develop on more mainstream technologies, with the exception of like Solidity.
Solidity is actually pretty easy to build on top of. It's pretty similar to JavaScript. I mean, you can basically copy and paste the code and do it on top of it yourself. I think that's why you see a lot of VSC 20 ICOs happening right now. And I know people that didn't know how to code and can build their own token. It's crazy. But it's so early right now, and a lot more people are learning and coming in the industry. There are a lot of communities that are trying to build more blockchain engineers and educate people. And you guys should find this. If you guys are engineers really interested, there's this really great company coming out of YC called Team. And I think they're from Europe. But they have a platform that shows you a bunch of engineers that are looking for jobs. There are blockchain engineers on there as well. There are a bunch of meetups here where there's a really good blockchain engineer and he does a lesson for people. And for a bunch of people that are just trying to get in the industry and learn. I think that's really important. If you're learning, you should learn with people to ask those questions, because it really, if you're coding on the protocol layer, I imagine that's a lot harder, and that would probably take you years to build. And to really meet those people and maybe code together. So all of this space is about community, and I feel like I've made a lot of friends and we've all really helped each other get this far, and that's super important in any space that we do. And right now it's so early on. You can find so many people out there that are at that same level just trying to learn.
As a segue into like the quality of engineering, the quality developer, I think the most fascinating thing about blockchain is its application in creative industries, but upon executing creative exchanges, there's so much context that needs to be considered in those smart contracts, a lot of conditions that need to be coded. And the question that I keep coming back to is like, sure, blockchain is like taking the trust out of trust, but who's writing those contracts? And how can we ensure that those contracts take into account every variable that needs to be taken into? I don't even know if there's an answer to this. I think it's a really abstract question, but it's what I keep coming back to.
That's more of an Ethereum-based question, I think.
Yeah,
Right?
yeah, definitely.
Yeah, Ethereum is very expressive.
Yes.
And that's a great thing, like, for smart contracts and things that like Augur. But then on the flip side, it has risks. So I think that taking a step back, and I think there's a lot of choices that we have these days that might not be expressive, that might be a little more nimble. So I think it really depends on what project you're doing and building from that point of view. I feel like like Ethereum is Ethereum is it's very special.
Special. So I think if you're looking into using blockchain and smart contracts, it doesn't have to be all or nothing. Either you have a legal contract or a smart contract. It doesn't have to be a binary choice. You can have both a legal contract, a traditional legal written contract, and a smart contract. So some parts of the legal contract can be automated with a smart contract. For example, if someone wants to buy tokens on Stellar, they could write a legal contract with, for example, like representations, warranties, covenants, and all the terms. And they could also have a smart contract, an escrow smart contract, which helps to execute something after a certain amount of time or when a condition has been fulfilled. So the use of both traditional contracts and smart contracts, I think you can use them together to augment, traditional written contracts. It doesn't have to be you put all of those things into, one smart contract.
Hey, I'm wondering if you guys can recommend any particular high-quality online communities or local meetups for those of us who want to get more involved.
There's the Team Block Society, one that I mentioned, and I think they're around, how many people are in that one? There are several hundred maybe, or 100. It's really new. It's pretty new. Yasmin is working really hard to build a community, has been traveling and bringing women from all around the world to be part of it, and she just opened up an office actually, which is really cool. I don't know where it is actually. She literally opened it up the other day. But there are other great communities of developers that you can join as well in meetup and event, right? And there are so many small communities that you kind of just get to know through going to all these events. And a lot of them are really boring and lame, but there's some really interesting people that go, and you should just suffer through that because you'll meet the right person, and that's what really opens up your world to these really cool spaces and to learning more and going deeper into the space.
Yeah, so
I
just wanted to add to that. If you go to meetup.com and you search Bitcoin as a Bitcoin meetup, that's a good one. That's a very big one. There's also Ethereum Developers Meetup if you want to get more technical. Stellar also has meetups, which are less technical in general. And I highly recommend if you're looking for a job in this space, meetups are a great place to meet founders who are looking to hire.
There we go. So my question is, there are, it's a new space, there's a lot of startups, but in reality, there's a lot of big companies and institutions, and they're set in their ways. Do you think there has to be a disruption, and then these startups become big, and then they take over the place with this new standard? Or do you think there is a way to convince these big institutions that have their ways to reform and implement blockchain and so forth? And if so, how?
Wait, say that again, sorry.
mean, so these big companies, oh, sorry.
Yeah, I can answer. I think it really depends on the ethos of the organization. Whether, if they have the leadership that they want to explore this. We're seeing, for example, Australia is actually at the bleeding edge of blockchain technology and have been for many years in terms of like their Australian stock exchange. So they they just finished their pilot with a distributed ledger technology. And they're rolling it out in the next 6 months. So it's like, you have this institution of the Australian Stock Exchange, going onto the blockchain. I think, and NASDAQ is doing like several implementations as well. So I think it depends on, the ethos. I don't know if, for example, the Federal Reserve would do it anytime soon. So I think it just depends on, I think it really depends on like the risk profile of, who's in charge of the organization.
Well, I think also one thing that we kind of have to be aware of is some of the larger institutions sort of co-opt the technology, meaning they use the name, but there are some significant differences in the technology, like the whole permissions issue and all that stuff. And so I've been around Silicon Valley a long time, and it just sort of reminds me of back in the 70s, they would say you could have a startup, buy 4 hogs, and as long as you called it Hogatronics, its stock value would go through the roof. Well, so I read similar articles now about companies putting blockchain in their name. And so you have to, really look at what's under the hood, so to speak.
That's a good point.
We'll take one last question.
Hi, I'm really new to this space, and I have a hard time, I guess, trying to imagine how all of these coins that are coming out are going to coexist together. I had someone share that, some people will subscribe to certain coins based off of certain baskets of goods, and I'm just curious to know what your visions are around that.
I think the difficulty here is that not everyone's investing in all these ICOs, and then at the end they go, oh my god, I have 50 different ICOs I'm invested in. They're gonna have dozens of wallets. And that's not likely for a space that needs to go mainstream, and that's why I'm really focused on things that are trying to solve for that, wallets that can kind of connect all of these together. And you're asking about how all these will work together in the end?
Yeah, how are we going to, I guess, trade with all these different coins? I mean, I can understand operational having wallets, but I don't see how it's possible to have so many different coins for different things.
Yeah, on a utility standpoint, it really doesn't make sense. Why does anyone want to hold 50 different currencies to use a service? And why don't these companies just, raise Ethereum or something, and then, you use Ethereum or Bitcoin to use service. But everybody wants their own token, and you exchange Ethereum for the token because you're hoping that's going to rise in value. In this space, if this does turn into security, then you kind of just treat it like stock, right? If you're investing in your portfolio, you have a group of assets that you invest in as if it's a stock. If the company does well, it rises, right? And so it's just depending on how you really look at it. And at the end of the day, a lot of people are just going to have a portfolio, a ton of different assets, and likely, maybe people just end up putting it back into the top 10 or 20. So who really knows how this market will develop? But as I see all these exchanges come out, it makes me think that a lot of these will end up acting like stocks. And the way people are trading is the way it looks like. So who knows?
No, I disagree with you.
Really? Okay, go for it.
So yeah. Here comes the controversy. I think, take speculation aside, right?
Yeah.
We already have like 50 different currencies that we kind of deal in. Meaning like we have Starbucks points, I have a CVS card, I have, frequent flyer miles, I have like American Express points. I think that all of these will be digitized in a way where I don't have enough, United miles to get to Mexico. So Lindsay, can I trade you my Starbucks points to?
No.
I think that, there's going to be a global distributed exchange where, there will be a market, and it will be that liquid, and you can go from Starbucks credits to United miles. And it'll be like one wallet.
Yeah.
So
Yeah,
She's absolutely right. That's a good point. I do think if you're talking about investing in ICOs, it's going to be not many people are actually going to be using the utility as if it's a reward system. But at the end of the day, some of these will actually really be valuable to people on a daily usage system where you go to Starbucks every day, you want these rewards so that you can, get free like frappuccinos every once in a while, right? That's really cool and appealing part of it. But yeah, who knows how all of this will really turn out. I think that there are many use cases for the way that these tokens act, and you can treat it in so many different ways. But I think it all depends on how the government really cracks down on this. So who really knows?
All right, wonderful. Well, I think, was there anything else that you wanted to add that we didn't touch on tonight? No? You sure? Okay. Well, thank you.
I guess maybe
do it.
make sure to read the Bitcoin white paper.
Noted.
So she over here.
All right, well, great. Well, thank you everyone so much. You're welcome to stay here and, finish drinking some wine and some cheese and connect with us up here. We'll be around. And thank you again to VSC and Young Professionals of San Francisco. Rachel and Helen, thank you. Good night.